Hi traders, Chris from the research team here at Pepperstone. Now we're looking at the crypto market in earnest again because we're seeing a lot of people asking the question after this big pullback, this drawdown that we've been seeing across the altcoins and in Bitcoin, is this now representative of a better entry point for medium and longer term positioning coming forward? Are we looking to put in a tradable low, or is there more downside coming through? Now, of course, Bitcoin has been trading very, very poorly since the 7th of October, where it was perpetuated by the liquidation move that we saw in the flash crash on the 10th of October, and then again compounded by Jay Powell's testimony where he said that a December rate cut was not a foregone conclusion. And since that point, we've seen massive drawdown coming through, not just in Bitcoin, but certainly across the alts, where some of them are down nearly 74% in that time. Now, we have seen huge liquidations. Whether that means that we're seeing a much cleaner position is obviously yet to be seen. But obviously, you go through the last 7 days, we've seen, nearly $10 billion of people covering long positions in the futures market, nearly $3 billion out of the spot market going to the ETF scene. And you can see that the Bitcoin spot ETFs have seen about $1.6 billion of net outflows coming through November. And of course, they were so influential in driving that price action through 2024-25 that now these outflows are obviously causing big headwinds and lower levels. Now, it's an interesting fact that I saw that the average entry point for all outstanding Bitcoin ETFs is 89,600. So one suspect, I don't think that's going to put a floor in the price by any means. But what it says is if we get a move through that point, there's going to be more people offside, and those long positions may have to manage that, and we may see further outflows playing through. Now, we can also go into the Treasury entity situation where strategy is down 54% since its recent high. And we can also see in there that the price is now trading in line with its net asset value, which actually is maybe giving a longer term buy signal. Obviously, we have to see, but we're obviously seeing things like Bitmine Immersion down 80%. SharpLink is down pretty heavily as well. So we'll see if they can provide us with some sort of leading indicator. So how are we trading this? I think if we have a look at the setup in terms of skew of leverage positions, we can see that from where we are at the moment down to about 90,000, there's about 1.1 billion leverage long positions. So if we see price falling, some of those leverage positions get squeezed, and that will just accelerate the move lower. On the upside, we're not seeing too much in the way of short interest in playing through. So the order book is skewed for a risk of a further move down. I think if we get a break of 91,800, we're going to see all those people who are offside who bought from 89,153, the recent low, they'll be offside and they'll be looking to manage again. That will just push price down. We see price below the 5-day exponential moving average, so that's just really keeping us a little bit bearish on that situation at the moment. We've obviously got Nvidia's earnings coming up as well. We could see crypto moving in line with that. And we've got non-farm payrolls on Thursday. So they're going to be risks to the market. I'm not going to get bullish really until we see a break of 96,000 at the moment. But really, that's how I'm playing it. I think there's further debt pain on the downside. But I think a break of 91,800 would probably accelerate that move. Trade at Pepperstone.